All right, welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. Just like we do every day, we'll wait a couple minutes here to get started. That way we can give everybody a chance to jump on and we can go live on all of the different platforms. So, we did pull the chat up there on the screen, so feel free to drop a comment there as you tune in, and we'll get started here in just a few minutes. Looks like some people already dropping some comments in there. Good morning to everybody. Got a great topic for today. Definitely a great tool to have in your arsenal as a loan officer. We'll be going through that in a little bit here. Good morning to Mark, Nick, Orlando, everybody commenting there. Good morning to the whole Mortgage Calculator team. Hope everybody's been having a great week. It's already almost over. This week flew by. It's already almost Friday. All right, it looks like we are live on all of the different platforms, so we can go ahead and get started here. We'll take the chat off the screen, and then we will get into it. Welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, one of which we're going to talk about today, which is a great non-QM loan that we offer, which is 1099 loans. So Jose, our sales manager, 27 years of experience as a loan officer and a realtor, is going to do a deep dive into 1099 loans today. But before we do that, just like we do every morning, let's go ahead and pull up our pricing tool and we'll go through the live rates for some different programs here. So Nick, let's go ahead and pull it up and see what the market is looking like this morning.
All right, let me switch my screen and we'll get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. If you'd like a full loan estimate, please get with one of our team members. We have over 300 licensed loan officers in 22 states for primary and second homes, and we can do our DSCR business purpose loans, which we love to do, in 44 different states. So if you'd like a full loan estimate with a breakdown, please get with our team members. This pricing tool will show us the general rates and APRs for our program. So if you'd like to see all the fees that go into those APRs, please get a full breakdown. But we are going to check out the rates for today. It is May 11th, just after 11 a.m. Eastern, so all of our general programs are live. So we'll use our pricing tool to set up a basic scenario. We will set a $400,000 loan amount. Let's set a LTV of 80% loan to value, 20% down payment, as we do every day. We will set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost for all of our demos. That is the typical request. Our customers are wanting to buy down the rate a little bit. And we're going to compare our conforming conventional rates to our FHA programs, and then we'll check out our expanded guidelines, aka non-QM, where we have over 5,000 additional programs. Remember, VA is only for eligible veterans, so if you are an eligible vet, we definitely appreciate your service. Would love to quote it up, but not everybody is, so we don't do it live. And same with USDA, that's only for properties in a USDA eligible area. If you do happen to be shopping in those areas, we can quote that very quickly, but not everybody is, so we don't do that live either. So we'll start with our conforming conventional. We will set up a purchase, 30-year fixed loan, standard loan, primary occupancy, single family property, regular home, 1 unit, state of Florida, county Miami-Dade. And for all of our demos this morning, we'll use an estimated FICO of 760 and an estimated debt to income ratio of 40. So with these basic settings, let's check out the rates this morning. Nice, a little bit lower than it was yesterday. We always love to see some downward movement, right? So yesterday we were at a APR of 6.6 something. Today we're at a 6.375 rate for one discount point in cost and a final APR of 6.551. So a little bit of downward movement. That's what we love to see. So for our borrowers out there shopping, today might be the day to lock that in. Remember to compare across APR, to compare across programs. So Today we're at 6.551 for conforming. So now let's compare this same scenario with an FHA so we can compare across the programs. So we'll set up the same scenario, 80% loan to value, everything else the same, and we're simply going to switch to FHA so we can check out our FHA programs. Many times customers may not qualify for conventional and can qualify for FHA as there are some less restrictions on the credit type of guidelines, as well as a much higher debt to income. But for this scenario, we'll keep everything else the same so we can compare directly across the programs. So it looks like this morning, FHA, best option here the computer has, 5.625 rate for 0.75 discount points and costs, and a final APR of 6.218. So still FHA in this scenario is actually a little bit cheaper for our borrowers. So FHA, even with upfront mortgage insurance and yearly mortgage insurance, is actually a tad bit cheaper in this scenario. Not every scenario, but I definitely recommend our borrowers out there shopping. If you qualify for both conventional and FHA, you might want to check out a quote from both, and our team would be happy to do that for you. Now, if for any reason our customers don't qualify for conventional or FHA, many other banks and lenders don't have other options. But that's where we love to come in with our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs using alternative income. So if we switch to expanded guidelines, everything else will stay the same, but we have a new option that pops up, and that's our income verification option. So full doc is 2 years of tax returns. That's what we would use for conventional or FHA. So typically we select an expanded guidelines program to choose one of the other options here. We have general 1 and 2 year options, but the specific options are asset related, business bank statement options. We have our investor options here we'll talk about for investments. We have personal bank statement options. We have written VOE options, 1099 options, P&L options, all kinds of different options for income. But our most popular is 12 months personal bank statements, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they file 2-year tax returns, have various write-offs and may not qualify at all or may not have enough income to get the home they want. So in this case, we're going to use their last 12 bank statements, their most recent 12 bank statements, to determine a debt to income ratio using just the bank statements. No tax returns involved. Therefore, most of our self-employed borrowers have good cash flow in their bank statements and are able to qualify for much more income and therefore a much higher loan amount and get that home that they want. So these non-QM programs are great solutions to get our borrowers unstuck where they may not otherwise qualify. So the rates are a little bit higher, but we love to offer these solutions. So let's check out our bank statement rates this morning. So very comparable here. The best option the computer found is 7.25 rate. Actually, this one right below it is actually a little bit cheaper. 7.25 rate for 0.875 discount points and costs, and a final APR of 7.326. So remember, conventional was at 6.5 this morning, and our bank statement is at 7.3. So very comparable there. And remember, this is a solution for our borrowers who would not otherwise qualify. So if you are looking out there and need to get a little bit of flexibility, these are the programs for you. Now, there are a ton of different options here. There's dozens and dozens, even hundreds of different options for bank statement programs. So please get with our team. They'll navigate which one of these programs works best for your situation. Some of these may allow credit events like a foreclosure, bankruptcy, and other things that may end up a little bit higher rate, but allow our borrowers who would not otherwise be able to get a loan to get that home of their dreams. Now, before we go into Jose's example on 1099, which is obviously a subset of the programs that we just looked at, we always want to do our investors for investment properties. So whether you're a first-time investor or you have a dozen properties, we would love to quote that for you. So let's set up our investment property. Same exact settings, 80% loan to value, 20% down payment. And we'll compare our conforming conventional investment property programs with our expanded guidelines non-QM. So first we'll go conforming conventional. Everything else will stay the same. The only thing we changed was occupancy to investment property. So let's check out the conventional rates this morning for an investment property. So the best option the computer found here, 6.875 rate, a little bit lower than yesterday. That's cool. For 3.625 discount points and costs. That's a little expensive for our investors. Final APR of 7.139. So great option, but most of our investors say let me see an option a little bit higher rate for less discount points. Unfortunately, with conventional, there isn't a lot of leeway because of adjustments they've added to investment properties. So even if we go down the list here to find a little bit higher rate, probably not going to get one discount point in cost. There is one option here, 7.625 for one discount point, but most of them are around 7.5 for 2.625 discount points, and we want to present other options. So that's where we love to present our non-QM options. So for customers that qualify conventional, these are great, but I definitely recommend anybody looking at an investment property also compares our other programs under expanded guidelines here. So if we switch to expanded guidelines, investment property, everything else the same. First, we have to select our income verification, and the most popular option by far for an investment property is going to be our investor DSCR. That stands for debt service coverage ratio. And that simply means that we're going to use no employment, no income from our borrower. We're simply going to use the estimated rental income from the property. So if the estimated rental income from the property can cover the mortgage expenses, that is a debt service coverage ratio of 1.00 or higher, aka the property cash flows. If the property doesn't cash flow and the rents can't quite cover the mortgage payments, that's a DSCR ratio under 1. We still have options for that. So you'll see a bunch of options here for DSCR ratios over 1, and we even have ones for under 1. But for the demo, I always delete this so we can see all the options in one screen. And the final thing we have to select on our non-QM investment properties is always a prepayment penalty. This is standard, so we always choose 3 years for our demo. We can choose 0. That will limit our loan programs and cost more money. And we can choose 5 years. That will be another limit to the loan programs. Not all the programs allow 5 years, but we'll save some money. So the most common option is 3 years. That's what we always choose for our demo, so we can see all of our different options. So with these basic settings, let's check out our DSCR rates this morning. So top option here looks great, 7.625 rate for 0.85 discount points and costs. So remember, our investors can now save that cash out of pocket for just a slightly higher rate, and a final APR of 7.7. So very comparable APR when we compare across programs. And remember, DSCR requires no income, no employment. You can do multiple loans. A lot of our investors like to cash out 1, 2, 5 properties to purchase 1, 2, 5 more rental properties. So great options here. And as you can see, they all have different DSCR options, different prepayment penalty options. So please get with our team to find out which one of these dozens, even hundreds of programs may work best for you. Some of these may allow credit events. Some of these may allow short-term rental income. There's lots of ins and outs for these programs for the DSCR. Definitely recommend, if you're looking at an investment property, to get a quote on these as well. Now, let me go ahead and introduce our deep dive topic. Let me switch my screen real quick, and we will get started. So for those of you who joined us earlier, you know the topic for today is going to be on 1099 loans. So this is a subset of our non-QM expanded guidelines products where we have, if you saw when I did the drop down there is an option for 1099 1 and 2 year options. So pretty common option here, but Jose is going to break down kind of the nitty gritty, where we would use this, why we would use this, and of course, pull up a couple live demo quotes. So if you're ready there, Jose, let's go ahead and have you take it over.
Good morning, everybody. Thank you for joining us, Daily Rates Live with the Mortgage Calculator. I have some great options for you today, especially for our realtors in the audience there, or for MLOs that may be working with realtors. 1099 is probably the best option for you because it does allow you to use up to 90% of your income to qualify, of your 1099 income to qualify. And I know most self-employed borrowers are probably not claiming 90% of their income. So let me get into our options for today. Now, 1099 is a great alternative to bank statements, because typically when we think about the first option, the lowest cost option for our self-employed borrowers, what we're thinking about is obviously bank statement, we're thinking of P&L, and we often overlook 1099s. 1099s is very easily quantifiable because they get a 1099 document. And in our best case options that we have, the 1099 option is using 90% of their income. So let's see here what we have. In our first option here with 10% down, now I do have two different rate options for the 10% down. I have one with less overlays. That's usually going to mean simpler loan for those out there that may not be
Easier.
yeah, may not be in the biz. So we do have two options, and obviously the less overlay option, rate you're going to notice it's going to be a little bit higher, but it is still 9.75 at par. And then you're looking at 8.5% as your lowest buy down option, and that's about 2.5, 2.6 points. So this is again less overlays. Now, if you want a little bit lower rate, obviously aptly titled extra overlays, letting this is how you set your expectations to your borrowers by letting them know, hey, I have two options for you. Here's one. It's going to be a little easier. And then you get into the explanations. Obviously, it's not just telling them it's easier and that's it. You have to empower them with the information so that then they can make a proper decision. Or let you know, no, Jose, I don't think I'm going to be able to go through that option. I think I prefer the more secure one because I don't think I can come up with those extra documents that they are requesting. So then, but if they can, this is the low extra overlay option that you can see 9.125 is the par rate. So the other one was 9.75, and you can buy this one down all the way to 7.5 versus 8.5 for for exactly the same cost. So now we have, to give you a little bit better rate here, we have our 15% down option, because again, 10% down is the minimum down payment. So here, oh no. Oops.
What, you got frozen?
I think so. Yeah, I don't know what happened there. May have an internet situation.
Well, we can still hear you, so it should be fine.
Okay, sorry about that. So I just can't see. I have delayed reaction there. Well, that one, 15% down. It's 8.625 is the lowest cost option, and 7.5 is the lowest rate option. So now we go to our investment properties. And with our investment properties here, yeah, internet seems to have stabilized. Sorry about that, folks. We're at 9.499 is the lowest cost option. This is 15% down, 85% LTV investment purchase with a 1099. So pretty good product. And they can buy it down all the way to 7.499. Which is just over 3 points, but due to our loan amount, we're still compliant at that cost. And now we have our 20% down investment option. Again, now 20% is the more standard option for 1099 investment. Just like 85% LTV, 15% down is the more standard option for the primary. Hence, you get better rates. Look at this. 8.125 gives you a $750 lender credit. And you can buy it down all the way to 6.99% at a cost just below 3 points. Now, if you notice the rates that Nick was providing us on the investment property purchase, they were a little bit higher than this rate and at about the same cost. So go figure, if you have your self-employed borrower and they have a 1099, save the headache. And for our cash out option here, this is an investment cash out. And here we go. $600,000 loan amount. So we're at 75. We're at 80% LTV here, excuse me. So 8.125 is your lowest rate option, and 9.375 has a little bit of a cost. 80% LTV. I wanted to confirm that to you all. You can see there. So again, 80% LTV was the option that I just showed you for purchase. And you can see 8.125 because that is, as I mentioned, the more common option. However, 80% LTV is not a common option for 1099. And actually, you got to remember what we're talking about here. Investment property cash out refinance using a 1099. We are at a higher loan to value than conventional loans, which I believe going full doc are going to cap that at 75%. So very good option here for our 1099 investors. Cash out.
All right, I don't see any questions. Doesn't look like. So hopefully everybody's got it.
Yeah, I don't see any questions. All right, let's go ahead and wrap it up then. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. That was awesome. 1099 loans. Oh, hold on. There's a question.
Here we go.
Go ahead. Pull up the question there, Nick.
Can we mix 1099 income with W-2 income?
We certainly can. We can mix it with borrower and co-borrower. Just keep in mind then there's going to be different requirements, obviously, for documentation. But on top of that, we can actually, we have options that will allow us to combine different income types for the same borrower. So we can have one borrower that could have theoretically W-2 income, bank statement income, P&L income, and 1099 income if they can, properly document the 4 different streams. But the more common stream is going to be W-2 and 1099, or 1099 and bank statement, another common way. Maybe as a realtor, they're 1099 and they have bank statement income through another route. You can get them 90% of the profit, quote unquote, under the 1099 income for the realtor, and then you can go bank statement, let's say, for their rental property income, because you can go bank statement on those and get up to 75% of the income generated by the rental property as the income, and then you just subtract the PITI of the rental property to come up with the net income provided by each property. So multiple ways to get creative here at the mortgage calculator to provide amazing solutions.
Looks like there's one more question here from Geneva.
Not sure what is meant by if we can go up to 80% on rentals, but I just provided an investment property option, which went up to 80% LTV on a cash out refi, and an investment property option that went up to 85% LTV on a purchase.
So it's higher than that, actually.
And we can use 90% of the borrower's 1099 income. Maybe this is your question. We can do 90% of the borrower's income, whether it's primary or investment property, is not going to change the percentage of the income of the 1099, of the gross amount of the 1099 that we'll be able to use. We can go up to 90% with our most favorable options. That doesn't mean every single 1099 program goes up to 90%. Got to dig deep into the guidelines, but our most favorable options do.
All right. Well, if you want a full loan estimate, you can connect with one of our loan officers at themortgagecalculator.com. Remember that we do this show every single weekday at 11 a.m. Eastern Time, where we go through the live rates and then do a deep dive into a different topic every day, just like we did today with 1099 loans. So We hope to see everybody tomorrow for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.
Thank you, everybody. Have a great day.